Hi, and welcome back to the LLQP video series. At this point, we've gone through an awful lot of the detail related to segregated funds. We've looked at them in the big picture. The last thing that I want to look at with respect to seg funds, or IVICs, individual variable insurance contracts, is who buys them? Why does somebody make these part of their investment portfolio? Well, as you'll see in Module 14, they can be held within an RRSP, or, as we already know, they can be held outside an RRSP. So they are an RRSP eligible investment. Which means that we can use them in a tax efficient manner. It also means, incidentally, that they're TFSA eligible and RESP eligible as well. So we can hold them in these various tax advantaged savings plans, which is great, but you still need a reason to actually buy this product. So why would you choose this as compared to, say, a mutual fund? And we've already looked at the advantages here of a mutual fund that apply also to a segregated fund. We talked about our professional manager. We said we have great liquidity. There are lots of different types of funds available. So we have flexibility in our choices here. They're diversified investments. And you can invest in them with small amounts as well. So lots of good reasons to invest in them right there. But again, what sets them apart from, say, a mutual fund? Well, one of the big advantages is that with a seg fund, as long as you've named the proper beneficiary, you have creditor protection of the invested amounts. So this creditor protection, as long as you have named a parent, a spouse, a child, or a grandchild as beneficiary, if somebody sues you, then the amount sitting in your seg fund cannot be accessed as long as it's been sitting in there for more than a year, and even between a year and 5 years. If the courts feel that you're trying to hide money by using your seg fund, they will overturn this creditor protection. You can also get this same treatment by naming an irrevocable beneficiary. This is exactly the same as what we see with cash value life insurance. You don't have to name a parent, spouse, child, or grandchild as irrevocable. You could name anybody as an irrevocable beneficiary. You can't name your own estate as an irrevocable beneficiary because that's still you as the beneficiary. It's still you that would have the right to change it. People also invest in segregated funds in addition to creditor protection. People also invest here because they like the idea of being able to invest in the markets without having the same extent, the same degree of risk that you have when you choose a mutual fund, for example. With a mutual fund, it would be, although rare, hypothetically possible to lose everything. With a segregated fund, because you have those guarantees, because you have that death benefit and maturity guarantee, you have a worst case scenario already established. That is, you know, as long as you wait for your guarantees to take effect, that you're never going to have a worse case than those 75 or 100% guarantees. And the other big reason why people use segregated funds is for estate planning purposes. You have the ability here to name a beneficiary. And when you name a direct beneficiary, this creates some advantages. This means that we're going to bypass, at the time of death here, we're going to bypass the will. So we don't have to look to the will to decide where our Seg fund is going to leave its death benefit. We just look to the Seg fund beneficiary designation. At the same time, we're going to bypass probate. That is, because you have a beneficiary designation, we don't have to go through provincial probate processes. In provinces like Ontario or BC, that's going to save you some money as well. In other provinces, that just means it's going to pay out typically more quickly and easily than an amount that would flow through the will, which has to go through probate and has to wait for the executor to get letters of administration in order to be able to pay out the full amounts. So we have this slightly higher degree of freedom here, this certainty that we know where it's going to go. And this can, by the way, create confidentiality as well. And that can be an additional advantage because you haven't had to probate that asset. And the other advantage, so we bypass the will, we bypass probate, and we end up with this quick path to this beneficiary, which allows us to bypass the claims of creditors at death as well. So creditors of the deceased person, or creditors of the annuitant, do not have the opportunity to touch this amount. They normally would in other cases where you don't have this direct beneficiary designation. So this is really the market for segregated funds. People who are looking for any of these characteristics might look to a segregated fund, and many of these features are actually unique to segregated funds within the investment world. The bottom three really set segregated funds apart from other sorts of investments. I hope that helps. I hope that you've gotten everything you need to know now about segregated funds. We've put together a fair bit of information on them, and they are a fairly important product from a life insurance perspective. They give that ability to manage that risk of old age, and they give us some advantages along the way. Thank you very much. Have a great day.